Now, in the month of December 2021, the Central Bank of Nigeria withdrew consistently from the reserves a total of $634.1 million to close the year at $40.52 billion, compared to 41.1, which was the rate at the beginning of December 2021. And so far in 2022, records have it that the CBN withdrew $21.5 million in the first 6 days of this year, 2022, to meet forex demands. And now we see that external reserves is flat at $40.50 billion. Well, we have Bolanle Agbaji, analyst with financial derivatives, joining us to share their observation, that is of financial derivatives, and expectation on the reserve and other important issues that concern the commodities market segment. Good to see you. Happy New Year. This is the first time we're seeing this year. All right, so we see that the reserve is flat at this time.
Yes.
But we saw that there was a lot of demand towards the end of the year,
Yes.
beginning of the year. I guess that's normal at this time.
It's definitely normal. You see a lot of, new entrants into the market, so many people come to visit their family members, and after this, they're trying to go back home, some of them trying to get, their PTA, and also school runs, to those that are trying to go back to school as well. They also, are added to the demand for the dollars, but the CBN has, done a good job at maintaining the external reserves and protecting the value of the Naira.
So what about remittances? These people that are coming should also, we should also get the remittances. Is it that it was so low, that's why we didn't really feel the impact?
It was definitely there, but it was quite low, definitely because of the, Omicron variant that actually started in the beginning of December, when, we had some lockdowns that were, imposed in the UK and some other countries. And, I think that affected, most of the plans for most people to come back. But they still did, but I don't think, they spent as much time and even brought as much money into the market. So we didn't really feel the impact as much.
So is the heavy demand over? What do we expect henceforth?
The heavy demand is not necessarily over, but it's quite stable at the moment.
We still have school runs.
Yeah, we definitely still have school runs up till the end of January. Most people are usually, most people usually travel abroad during the month of January to resume, school in most of these countries. So we definitely would not see that heavy demand, but stable demand for the forex.
Is this what is affecting the movement of the Naira? Over the weekend,
Yes.
we saw that it was, I think it's 419 or 416.
In the IE window, yes.
Yeah, in the IE window.
And also in the parallel market, we saw an appreciation, which is great. And definitely we didn't see any movement in the external reserves. So it means that the central bank is not releasing as much, dollars at the moment, because I don't think there's any need to now to create that kind of uncertainty in the market.
But what is this doing to the commodity space, all of this reserve and movement of the Naira?
So right now, it's not doing so much in the commodity space. We're seeing that prices are quite stable and more or less low. Average domestic prices are quite low at the moment, which is great. Although when you compare the prices last year we had seen a much more decline in the commodity. Well, looking at a range of commodity prices, but this time the decline is not as much as we saw last year. And I think that's also what contributed to this was also the harvest season and the fact that we're seeing consumer resistance when it comes to increasing demand for commodities within the market.
And I think towards the end of last year, we saw some items, I guess because of the harvest, the price moderated.
Yes, so some items like beans, tomatoes, we saw moderation in the prices, and we didn't see, the price hike that we'd usually see in December. The price hike wasn't that much compared to, previous years, but also between December and January, we usually see a drastic decline in commodity prices because, that increased demand has more or less significantly dropped. But that's not the case at the moment, just because we did not see the increase in demand as much, and also the fall in prices is not so significant at the moment.
Okay, so I know this is not part of your slide, but we also see that the price of gas.
Yes. No, but gas has always been an issue within the country, just because we don't produce enough. So the price of gas would always, be affected by the supply.
But the federal government says it's moderating because of increasing supply.
Well, according to them, they've made improvements in that
Have you
space.
seen a moderation in your end?
From
I
our
haven't
end, not
seen, so
necessarily, no.
okay.
But I'm sure, when you're increasing supply, it takes time. It's not something that is immediate in the market. They've made initiatives, yes, but the actual increase that would affect prices would come in the following months, not drastic.
Okay, so I guess I'll continue using my
Yeah,
firewood until
no.
until I see that. And then the U.S. Fed, I mean, it's like the whole world is tied around the
Everyone
United
is,
States.
yes.
Everyone is waiting with bated
Everyone is
breath.
anticipating. Some, analysts mentioned that they expect, at least 4 rate hikes. Some are talking about 3 rate hikes. Just because, it's been a long time coming. We're seeing, hopefully, shifts from this COVID situation. And, most economies are trying to get the economies back to where it was pre-pandemic levels. And, and also whatever happens in the U.S. affects majority of the
Because the
world.
dollar is like the world's
Yes, exactly.
currency.
And, it's the reason why the IMF even released a statement about how emerging markets should position themselves. We do know that the Fed is going to carry out some rate hikes. We don't know the number, but they've mentioned that emerging markets should brace themselves and more or less increase, interest rates as well to protect their currency, protect their economy. Right now, Nigeria is not, positioned in that space just because, we had seen inflation decline for about 8 consecutive months. And, the right thing to do in this moment is more or less to reduce interest rates.
MPC is coming, I mean, 24th, so...
Yes, so it's most likely something they might consider. We do expect that should be something they talk about because it's a no-brainer in economics. When you have a situation where inflation keeps declining, almost leaning towards price stability, we do expect, interest rates to decline.
And in that line, the World Bank has also projected Nigeria will have one of the highest inflation rates globally and the 7th highest in sub-Saharan. Now, that sounds really scary.
It does in the sense that, our target level is currently at about 9% and we're way above it at 15.9%. Hopefully it will decline to about between 14 and 15%. It's definitely high, but I'm sure that, the CBN is not as worried because they're definitely working towards it. And just because we had seen this decline for the 8 consecutive months, I think it's something positive to look forward to, except something drastic happens in the year 2022. Although we're looking at the budget, how the government is going to fund the budget, tax issues, those are
tax issue is a major one.
Yes.
We discussed that yesterday.
Yes, so, they mentioned that, they're increasing tax on carbonated drinks, and the Nigerian Labour Congress had come in to mention that, they're not...
Everybody's talking, Manufacturers Association lives. I mean,
exactly, because ideally, if they're actually going to target, health of many individuals, which I don't think is the forefront of many individuals within Nigeria, it will make sense to actually target sugar. Tax
yeah, but they call
sugar.
it sugar tax. That's
yes,
what they're
but
calling
they're targeting the final product, which would directly affect consumers and affect, the living standards of many
and
individuals.
affect more people anyway.
Exactly, as opposed to, targeting, some of these companies and manufacturing companies. And even at that, some of these manufacturing companies, the revenues are quite squeezed at the moment. So increasing tax, I know hands are tied, they're looking for ways to boost our revenue without, borrowing so much from the external, because our debt levels are already very high. So I'm sure
and we still have over 6 trillion naira to...
Exactly. So it's a tight one for the government at the moment, but I'm sure they would definitely find...
Yeah, you talk about the inflation and the fact that for 8 consecutive months now we've been seeing a moderation also brings to the question the impact of those moderation. Do people really feel it? I know that speaking to your CEO some time ago, he did talk about, I mean, considering what makes the basket of commodities that is used, to measure inflation so that we can feel it. If we say there's a moderation in figure, let's feel it in the market.
Well, when you're looking at, the direct necessities of individuals, energy prices, that's fuel prices, the basket of goods that are actually consumed within the economy, the staples, rice, beans, all of that, we're definitely seeing prices decline, but prices are relatively high compared to previous years. So the living standard is not definitely going to be so great. And definitely I understand the fact that he mentioned that looking what baskets of goods are they really using to compute inflation. But I think that's another story for another day.
And I guess that's, but do you think we can escape this warning by the World Bank? Is there a way to escape it?
There is no way, in the sense that, except, the CBN decides to increase rates and, look at the trade-off between focusing on your currency and working on your economy as well. The CBN right now is focused, and the government is focused on protecting our exchange rates, as opposed to looking at the individuals within the economy. So the IMF, obviously, their advice has they keep creating that level playing field. Pick which one works best for your economy. But at the same time, I don't think we can escape it as much, because we're heavily reliant on the external economy.
And let's go to the commodities space now, starting with oil. Oil was up this morning. We don't know what it is. I mean, the price, because
yes.
And of course, it's reaction to expectation from the U.S. Fed decision and the issue with Kazakhstan.
Yeah, so you have supply disruptions in Kazakhstan, you have supply disruptions in Libya, yes. But at the same time, I think what's most important is the fact that OPEC Plus has not been able to meet their quota when it comes to increasing production. They plan to increase production by 400,000 barrels per day, but most countries have not been able to do that. So that's falling short and falling way below the demand that we're currently seeing in the market.
And then looking further at the commodity space, we see that the price of goods are elevated.
Yes. Yes, so they're elevated just because, you're seeing the fact that there's what most analysts call it the individual aspect, and also the climate change aspect as well. We had seen the individual aspects, we had seen the Omicron virus and all of that affecting, supply when it comes to commodities, but also extreme weather conditions has been impacting, some of these commodities. For example, with cocoa, extreme dry weather is affecting our cocoa production in Nigeria at the moment. And, that's obviously going to be negative for our export earnings, which is not great at the moment, trying to be at a point where we're also trying to build our reserves, find, funds to, fund the 2022 budget as well.
And so what do we expect? The harvest season is almost over, or is over?
It's almost over, but, harvest season comes in again at about Q2 this year. So right now we're trying to enter the planting season, and hopefully the extreme weathers, it doesn't disrupt, some of the yields that we do get after the planting season is over.
So we expect price to moderate? Or?
Moderate, keep the same pace that it is, except something, drastic happens in the markets regarding supply and demand.
And for oil, what do you see?
Well, we expect oil prices to range between, $79, $80, $81 per barrel at the moment, except, we see huge changes in the supply. If, OPEC comes in again in the next meeting and they try to increase, supply, the fact that, supply is still falling way short of demand, we will definitely see, a drawdown in the price of oil.
And Nigeria is still at, our target is $62.
Yes. Yes. So it's we're very cushioned for it, definitely. We're way above, what oil prices are trading at, and hopefully, that margin we still get it to fund.
And you don't see it going below that. I mean, when we had the 62,
I think I'll be more optimistic about oil prices at the moment.
Because a lot of people have not been so optimistic when they hear of 62. They think it's too close for core.
Well, I think with what is going on, with what we can see in the markets, I think I'm very optimistic about oil prices remaining. Even if it's going to fall short, I don't expect it to go below $75 per barrel, at least in the first 2 quarters.
Okay, all right. Well, thank you so much, Bolanle Agbaje, research analyst with FDC. Thank you so much for sharing your thoughts with us.
Thank you.
So we'll take a break now. After the break, we will continue this discussion on oil, especially as it concerns Nigeria and crude production. That will be after the break. Stay with us. It's Business Morning on Channels Television.